Well, you keep saying was. Is this war over?
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
President Trump says that the Iran operation is close to over and talks between U.S. and Iranian negotiators could restart as soon as tomorrow, with the Strait of Hormuz effectively locked down and Iran's economic power squeezed. The White House says a path to long-term peace is now within reach, with America negotiating from a position of strength. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the hour, Slate Stone Wealth Chief Market Strategist Kenny Polcari. Good to see you, Kenny.
Thank you.
The U.S. military is maintaining a naval blockade on Iranian ports, completely halting trade. The fragile two-week ceasefire has a week to go. Vice President J.D. Vance says he feels the pieces are there to strike a deal.
There's a lot of course, mistrust between Iran and the United States of America. You're not going to solve that problem overnight. But yeah, I think the people we're sitting across from wanted to make a deal. And I know the President of the United States told us to go out there and negotiate in good faith. That's what we did. That's what we're going to keep on doing. I feel very good about where we are.
And now Europe is finally moving. The Wall Street Journal reporting allies are drafting a post-war plan to secure the Strait of Hormuz without direct U.S. involvement. It's a move that the president had been pushing on for weeks. The timing may not be a coincidence either. Allies positioning for a new post-Iran order. And that was a fantastic interview this morning with Maria, sitting down with the president. He's saying this is close to over. You've got markets right now, a Dow that's a little bit lower, but you've got the NASDAQ and the S&P 500 up. You've got oil at $92 a barrel. This is a market that is telling me it believes this is close to over.
I agree with you 100%. And I think investors and the market itself is starting to look through. The news is positive. We've all seen what's happened to Iran now. We've all seen how we're blockading them economically and really choking it off. I think they're losing $430 million a day for every day that the ports are blockaded, that they're not doing anything. And so at some point, I think they're going to quickly realize that they need to really come to the table and play by the rules.
Yeah, when you choke a country economically, certainly it incentivizes having real conversations.
And we've taken the military out of the picture.
But last night before I was going to sleep, I saw a Wall Street Journal alert for an article about what is left of this regime. And I read it in depth, and the authors were outlining the key players that are having the conversations here and their histories, telling you a little bit about them. And Dagan, just summarizing that piece, they were saying that this regime might be even more hardline than what we had in the first place. And that was a little troubling for me.
That's why it's so critically important at this juncture to starve the regime of assets, revenue, and funding of future malign activities in the region. And it's a question mark of, and I understand the reasoning, but of why the Treasury Department gave Iran a sanctions waiver in March to continue to kind of unabated sell any oil that it had at sea, which allowed it to sell it at a premium. And now that will expire in short order in a few days. It will not be renewed. But the reason they did that is because just to make sure that there wasn't an immediate supply shock, given what was going on in the Persian Gulf and in the Strait of Hormuz, and to make sure that the oil was getting to where it needed to be, even going to Indian refineries. But there was one thing I wanted to point out in terms of why is the market reacting the way it is. The market, I said yesterday on the bottom line, the market's saying the war is over and the economy here was untouched by this war in essence. The NASDAQ at yesterday's close was up more than 4% from where it was before the conflict started. And one of the things is AI. Scott Bessent, Treasury Secretary, gave an interview with the Wall Street Journal editorial board yesterday. He went into a lot of different things, but he said that talking about Anthropic's Mythos large language model, its new frontier model, he said is a revolutionary step that will keep America ahead of China in AI. That's driving it, the spending in infrastructure, but also Tom Closa notes, the kind of gasoline price expert. What's benefiting the U.S. is now oil and distillate and gasoline exports. To 12.744 million barrels per day for U.S. exports of crude and refined products in the most recent release this morning. That is a new record. More than 89 million barrels of liquids left this country last week. Another record likely soon. That is hugely beneficial to the U.S. economy.
Wow. And Taylor, I heard you buzzing about the S&P 500 at new records. So,
Huge.
wow,
Can you miss
what
it?
a difference a week makes, right?
Totally. I mean, and this sort of charted yesterday how you typically see a big drawdown 21 days after the beginning of the event, and then you recover. And it was a big drop down, but it was also a big recovery. So, yes, 87,000 on an intraday level is the record for the S&P. Blink, you miss it. We are there. We are in record territory. A few things here. Obviously, the consumer is feeling some pain, but Jackie, in terms of corporations, in terms of like the global economy, you need $150 per barrel sustained on a long-term, multi-month basis to wipe out the benefits of the one big, beautiful bill. Now, that level might be different for individual consumers, but we are nowhere near there in terms of corporations seeing all of the tailwinds being wiped out from any headwinds from gas prices. So that to me is really good. 150 is the level, and it's not hitting it. It is sustaining it on a multi-month basis. Other good news that just came out. American Express just said that 30-day delinquencies on their small business loans, only 1.7% as a percent of the total. So right now, it's the end of March, that was the data, they're not seeing a massive spike in small businesses that are defaulting. That's good news. Here's what Wells Fargo had to say. Consumers are spending more than they are a year ago. Yes, that's because gas prices are higher, but gas is 6% of their debit card spend and 4% of their credit card spend. Right now, then that number is 7 and 5. So you've gone up an extra percent in terms of the total of what people are spending on gas, but I'm not seeing that number of like, oh my gosh, now it's 10% of my total spend. It's gone up 1%. Wells Fargo also says that it takes consumers multiple months for gas to be high before they stop spending on other categories. They have not stopped spending on other categories as of yet. Now, they did say the end of this year that could happen, but that's assuming gas prices stay high through the end of the year. So again, to me, that shows you have until about mid-year to get gas prices down before consumers start to change their spending habits. We're thinking about spending because it's a big driver of the economy.
Okay.
So I guess I say here for now, and that was a lot of data, but to me, that big takeaway is I'm seeing some positives here today.
I take the president at his word, Brian, that this is close to over, but we don't know how it will be over, because I still don't see the tentacles of this regime handing over the enriched uranium, saying we're not going to, interfere in the Strait anymore. United States, you can go home. Everything's going to be fine here. Somehow I just don't see that scenario working out. There are other ways to make sure that this will be over, and the president has those tools at his disposal.
Yeah, I don't know what close to over means. I don't even know what that looks like. I totally agree with you. I do think it's possible that the hot war part of this might be over pretty soon. Okay, we're going to shoot at them less. That's fine. There is no way the economic war is anywhere close to over. That's going to last years. I'll tell you what I think about that. The blockade's working so far. That's awesome. Iran's losing a lot of cash. That's awesome. Europe, believe it or not, Europe might be talking about helping out with the Strait of Hormuz.
It's about time.
Now, I don't know if they're going to do it, but that would be a big win, okay? And I want to throw something at you from Victor Davis Hanson. I thought this was brilliantly put. He says the Gulf nation agendas will eventually make the Strait of Hormuz irrelevant to oil exporters. Saudi Arabia will expand its pipeline capacities to the Red Sea. UAE will do the same and expand its existing pipeline to the Gulf of Oman. There's even some talk of Saudi Arabia building a massive line across Jordan to the Israeli Mediterranean port of Haifa. Okay, so that's all economic war, right? The shooting stops, we get some kind of deal. Maybe Europe polices the Strait of Hormuz, and everybody who matters says we're not going to depend on the Strait anymore. And what does Iran have left? It doesn't have a nuclear weapon. Its conventional capabilities are gone, and the Strait is increasingly irrelevant. That is a U.S. win.
Does Victor Davis Hanson listen to this program? Because I think we said that last week.
I think he watches every day right at this time.
No, I'm not joking, because also Kuwait's going to build its own bypass pipeline, probably. Iraq is going to potentially build a pipeline to the Mediterranean through Turkey. That's 5 years out.
Right.
But I wrote it down. These are my notes. I swear to Jesus. Oh, I shouldn't swear to Jesus. I swear to dogs. The Strait of Hormuz will never again be as powerful a weapon that Iran can use against the U.S., the Middle East, and the rest of the world.
And that's groundbreaking.
It's done.
That's groundbreaking, even if it takes 5 years to build some of these pipelines. At some point, you have to start. And that's how President Trump has approached supply chain issues and dealing with bringing manufacturing back home. That, sure, it's going to take time. But if we never start, then it's never going to happen. So this is remarkable. All right.